Good morning, good afternoon, or good evening, depending on where and when you're watching this. I'm your host, Chase Majerus. It's the first week of December, which basically means that it's about to be 2019. Kind of weird, right? But as we come to a close on a pretty weird 2018, where we apparently find it necessary to do surgery on a grape, some of us are wondering if the FOMC will really pull the trigger on another rate hike.
Another one.
Stay tuned because this is your weekly economic update on This Week Today, sponsored by Mutual of Omaha Mortgage. Let's roll out. Okay, so why does it make sense for a rate hike in December? Well, for one, the U.S. economy is in great shape. Inflation remains steady, and we have a workforce that's at full employment. So why would we say no? Well, there's uncertainty around the ongoing trade rift between the U.S. and China. And of course, the slumping housing market that's driven by, you guessed it, rising mortgage rates, and of course, recent market volatility. So in my opinion, the December 19th rate hike seems pretty certain. And over the previous rate hike cycle since 1994, there have been 4 other December rate hikes, with 3 indices trading positively 100% of the time in that period. So if you're looking at how the stock market might respond, don't wear red, because the market's looking pretty bullish. According to Freddie Mac, of the borrowers who refinanced in the third quarter, more than 80% chose the cash-out option, withdrawing $14.6 billion. That's a really weird picture. Anyway, $14.6 billion in equity out of their home, which is the highest share of cash-out refis, not refried, since 2007. More often than not, homeowners are taking that cash and reinvesting in home renovations.
What we're thinking is to take out the wall between the kitchen and living room for a more open concept. Our job is to deliver the maximum wow factor for the least amount of budget.
I'm going to take an enormous bite from this article like it's a 10 out of 10 pizza on David Portnoy's Instagram.
One bite, everybody knows the rules.
If you haven't caught on yet, the average millennial isn't all that stoked on the idea of home ownership because it doesn't really support the lively and non-saving lifestyle of the average 23 to 35-year-old. The tired response to that dead horse is, well, millennials, they're just waiting longer. Well, that's not really true. Among those between the ages of 35 and 44, homeownership rates have fallen like I can't get up. There are tons of very real reasons why homeownership is declining, and we've heard most of them, from marriage delay to remaining as mobile as possible both professionally and geographically. A weirdly scary stat that I liked from Redfin states that it takes 5 to 7 years to break even on one-time home ownership costs, considering the cost of purchasing, owning, and selling the home. Dude, get real. I'm 25. I'm not committing to something for 5 to 7 years just to barely break even. By that time, I'll be 30 to 32 years old, and far be it from me to know what 30-year-old Chase is going to be into by then. So as the writer of this wonderful article states, we need new ownership models that align with this new reality. New companies will fill this gap through innovative models like fractional ownership or something that better conform to the needs of the consumer. What that looks like, I don't really know, but it smells like an interesting opportunity.
You smell that? What is that?
What?
What's that smell?
The cologne?
No.
Opportunity.
No. Money.
Okay.
Now time to check the calendar board update. Show me the calendar. Okay, on Monday, we'll see data from construction spending. On Wednesday, the ever-popular Beige Book will give us the summary of commentary on the current economic conditions. And on Friday, unemployment rate data and consumer credit figures. All right, y'all, that's it on This Week Today. To learn more about the awesome company that makes this show happen, check out mutualmortgage.com. I'm your host, Chase Majerus. You can find Mutual of Omaha Mortgage and myself on social media. Remember, you should hit the gym now for a couple weeks so you can take off a week or two at the beginning of 2019 while those New Year's resolutioners work themselves out. Anyways, we'll catch you next week.